My name is Serena Stepanovic, and it is my pleasure to moderate today's webinar on behalf of World Vision, the co-organizer of today's event. Before we begin, let's start with two very important points on housekeeping. This webinar is designed to spark dialogue. We want you to feel free to engage with speakers during the webinar through the chat. To get us started, please take a moment now to share your name, role, and organization in the chat. You can also start asking your questions to the speaker in the chat box. And second, very importantly, we are pleased to provide simultaneous interpretation to French and Spanish. Please navigate your screen now and click on the globe icon at the bottom to change the language that you prefer to listen in, and include English if that is your preferred language. So I'll give you all a moment to do that. Okay. So as mentioned, today's session marks the launch of the In Practice paper, Financial Pathways Toward Greater Resilience and Economic Inclusion. This work is a result of collaboration between the World Bank, World Vision, the Chronic Poverty Action Network, and IFPRI. As many of you know from your own work, poor and vulnerable households face the highest exposure to risk that lead to shocks and stressors. These in turn tend to quickly and at times deeply affect household economic security. Yet these same households often lack the financial resources to navigate these challenges effectively. Access to a range of financial services and products, such as loans, savings, credit, and insurance, can help households anticipate, adapt to, and recover from sudden shocks. Approximately 3/4 of economic inclusion programs integrate financial services alongside other key components like cash transfers, coaching, and training. In this session, we'll explore the links between economic inclusion, financial inclusion, and resilience. We'll also talk about promising practices in designing and delivering financial inclusion interventions for the extreme poor and vulnerable. And lastly, we'll share some context-specific examples from Ghana, the Dominican Republic, and a multi-country global program that share national and local financial inclusion services as described by our panelists. So I'll pass this over to Janet Heisey from the PEI team, who will share more about the In Practice paper. Over to you, Janet.
Thank you so much, Serena. Appreciate it. We are indeed hoping that we can provide a little framing session, a little framing information to help us think about throughout the course of the presentation, throughout the course of the session, exactly what is it we're talking about in terms of financial inclusion, economic inclusion, and what are the ways in which these types of interventions are integrated. So let's look first at what are economic and financial inclusion, very key definitions here. If we think about economic inclusion, this is a process by which individuals and households are integrated into broader economic and community development processes. And these are designed to overcome the multiple constraints and structural barriers that affect especially people living in extreme poverty. And economic inclusion programs then are coordinated multidimensional interventions designed to overcome those constraints and that allow participants to increase their income and their assets. Now, if you look off to the right there, you'll see that these are the 8 common components, economic inclusion components in most programs. All have at least 3, and most have 5 or more. Skills training, coaching, business capital are all quite straightforward. If you look down to number 5, it includes financial services facilitation. So this is one of the ways in which we sometimes see economic inclusion programs and financial inclusion programs working together, integrating. And so what is financial inclusion? Financial inclusion is a process by which individuals and businesses access and effectively use affordable and responsible financial services. So this is a means of building out a cadre of tools that are designed to meet the needs of participants along a sort of broader spectrum of wealth categories, if you like. And we might think about economic inclusion a little bit as an on-ramp that enables the people living in extreme poverty to move into financial services and hopefully in some cases grow, engage with more and more financial services to build and foster long-term resilience. And it's that resilience that we're particularly interested in and the ways in which financial inclusion can properly backstop and strengthen economic inclusion programs. So we think about resilience in a couple of different ways, and there are specific ways in which financial inclusion components strengthen these kinds of resilience. Anticipatory resilience is the ability to anticipate shocks and learn how to deal with them through planning and preparation. And savings and insurance products are particularly well placed to help build that kind of resilience. Absorptive resilience is when you're how a household deals with a shock during and then immediately after it takes place, whether a health shock, a climate shock, some sort of financial shock typically. And savings, payments, and credit are good components and elements that enable those shocks to build absorptive resilience. And adaptive resilience is not surprisingly how we learn and grow and develop from following a shock. So how are we able to recover thereafter? Credit, insurance, and savings are also good for building that type of resilience. So all of these kinds of strategies can really strengthen how it is that we're building programs and strengthening outcomes. If you see here the four key elements or the four key components of financial inclusion programs, the products here, savings, which builds a financial cushion, credit can smooth consumption, insurance can protect against risk, and payments really smooth the process of delivery along the way. And down below here, we see ways in which economic inclusion or other programs might think about tailoring different programs, tailoring these products to their program and to their program participants. So with savings, we might think about if you integrate this into a program, maybe tweak account features to make sure that people living in extreme poverty can access them. If you think about credit, possibly introducing grace periods might be worthwhile. Insurance providers that want to work with people living in extreme poverty may think about index-based insurance and payment systems. Digital literacy, which we'll hear a lot more about from our panelists, and financial literacy might be helpful to encourage the uptake of these kinds of services. Now, we've talked a lot about the what of products, but now let's talk about the how. How do we bring financial inclusion into programs? There are four different strategies that we commonly see with economic inclusion programs. Community-based savings, village savings, and loan associations is one of the most common ways in which platform that enables financial services to be delivered to a group of participants. So this is a really popular strategy. We're seeing an increasing number of financial service providers, from 38% of economic inclusion programs this year in this year's State of Economic Inclusion report versus 18% in our 2021 report. So that's a real growth here. Financial service providers can include microfinance practitioners, banks, and other informal service providers as well. Market facilitators can help in fragile settings where institutional capacity may be low. And you'll hear a lot about digital technologies and how those are, excuse me, integrated, with 23% of economic inclusion programs reporting that they're using digital technology. Now listen out to our panelists, because they've got a lot of great examples of how it is that they're creating pathways from economic inclusion into financial services, improved financial and services. And so you'll hear a lot of talk about digital transfers, VSLAs, as I've described, and how they're modifying some of the components of economic inclusion to build financial capacity. And it's important to note that these are two governments and one very large institution that serves a large number of participants and offers a range of services. And so this kind of integration can be so valuable for government practitioners and large institutions and others who seek to serve a range of participants across the financial spectrum. So the report that's been released today, which you'll hopefully be able to download and read more about, includes a lot of recommendations. But basically, we encourage folks to facilitate the access to a diverse range of financial services, customize those services, use digital technology, and offer some financial and digital literacy training along the way to make sure that that uptake is strong. So with that, let's listen up to our panelists to learn more about how this works in practice.
Thank you so much for framing this discussion for us, Janet. Now let me introduce our first panelist, Ms. Naomi Arboleda Castillo. Naomi has extensive experience in social project management. She currently serves as the director of the economic inclusion component in the World Bank project for the Superate program in the Dominican Republic. Naomi has held key roles at institutions such as the Ministry of Women of the Dominican Republic, where she was director of international relations, and as Director of Economic Empowerment in the Superate program. Her experience as an independent consultant includes coordinating projects in both the private and public sectors, with an emphasis on managing funds from the World Bank and IDB, as well as overseeing the execution and compliance of development projects. Naomi will share how the government program Superate builds partnerships to integrate financial services and economic inclusion to support households in their unique paths out of poverty. Naomi, over to you.
Thank you very much, Serena. Buenos días. Yo voy a hablar en español. Espero que todos tengan su traducción encendida. Nada, reiterar, mi nombre es Naomi Arboleda. Yo soy parte del equipo del programa Supérate. Coordino el componente de inclusión económica para proyectos externos. Y nada, antes de iniciar, primero que todo, agradecer al Banco Mundial y a su extraordinario equipo de la Alianza Estratégica para la Inclusión Económica por permitirnos participar como gobierno y compartir nuestras experiencias. Y también agradecer nuestras experiencias y continuar aprendiendo para generar políticas públicas más inclusivas y más resilientes. También agradecer a Serena y a todos mis compañeros, a Desmond, y nada. Bueno, es un placer para mí presentarles al programa Supérate. Si puedes pasar la siguiente slide. Por favor, si puedes pasar el siguiente slide. El programa Supérate, contextualizarlos un poco. El programa Supérate surge como la principal estrategia o mecanismo de lucha contra la pobreza en la República Dominicana. Y esto significó para nuestro país evolucionar de un enfoque asistencialista a uno basado en la generación de capacidades y el acompañamiento continuo a los hogares en condiciones de vulnerabilidad, con objetivos fundamentales, objetivos claves. Primero, un enfoque multidimensional para el combate de la pobreza y el desarrollo humano, a través de garantizar un piso de protección social a la población más vulnerable del país. ¿Cómo? Generando una ruta sistémica de capacidades en formación técnica, formación en el emprendimiento, en desarrollo social, en habilidades blandas, con un eje transversal, la tecnología como un eje transversal. Y claramente con herramientas de monitoreo y evaluación constante que nos permitan saber dónde está ese beneficiario en la ruta en cada momento. Puedes pasar el slide. Pienso que es importante contextualizar un poco a los que asisten en el día de hoy sobre el impacto del programa Supérate. Supérate actualmente impacta a 1.500.000 hogares, representando un 40% de la población, con una inversión promedio de 839.000 millones. Y esto representa un 1.5 del PIB de la República Dominicana invertido en protección social. Y ese dato es relevante porque es como la apuesta del gobierno dominicano a que la protección social representa un eje fundamental para el desarrollo de nuestros países, bajo una nueva institucionalidad en donde todo el tema de la resiliencia es un eje fundamental, dado que somos un país que es altamente impactado por choques climáticos. Puedes pasar el slide. Nosotros vamos hacia una ruta de desarrollar un sistema de protección integral. Algunos de los elementos, tenemos 9 componentes, pero me quiero centrar en los 5 componentes fundamentales que han sido la innovación a nivel de nuestro programa. Y son un componente en salud, seguridad alimentaria en emergencias, donde desarrollamos un bono de emergencia, que en otra oportunidad podemos compartir mejor. la estrategia y la política de cuidados, Supérate Mujer, que es una estrategia que apoya a mujeres víctimas de violencia, el componente de inclusión económica, que es el que vamos a desarrollar hoy, y toda una nueva ruta de acompañamiento sociofamiliar. Puedes pasar el slide. Y en el marco de de la ruta de superación económica, quisiera señalar que nosotros hemos creado hace unos años, replanteamos la ruta de superación económica y la ruta de superación de la pobreza, en donde hemos creado tres grandes bloques que permiten al beneficiario recorrer una trayectoria, una ruta, en donde el primer bloque lo que se centra es en inducir al beneficiario en el programa que es, y tenemos una base, nuestra estrategia fundamental se llama Atrévete a Soñar, donde creemos que los gobiernos muchas veces nos abocamos a creer en que sabemos lo que la población más vulnerable necesita. Sin embargo, a partir de esta estrategia basada en las aspiraciones, plantea toda una teoría de que hay que conocer mejor las aspiraciones de esa población más vulnerable con la que trabajamos. ¿Para qué? Para poder hacer una conexión entre las políticas públicas que diseñamos y las aspiraciones de esta población, que nos permitan realmente que esa persona se haga partícipe y se introduzca en la ruta y la transite de una manera exitosa para lograr la superación de la pobreza. Puedes pasar el siguiente slide, por favor. Un poco contextualizarlos sobre la realidad de la República Dominicana en materia de inclusión económica. Hay muchas barreras que enfrentamos, por ejemplo, la falta de documentación, la falta de confianza en los sistemas, territorios que no tienen una cobertura apropiada en materia de inclusión económica, según la encuesta nacional de inclusión y educación financiera del 2023. Sin embargo, el panorama que presentamos nos dice que desde el 2019 al 2023 tuvimos un incremento llegando a un 65.0%. También en cuanto a productos, a tenencia de productos e inclusión financiera, tuvimos un incremento de 8.7 puntos, donde las cuentas de ahorro y las cuentas de nómina son los productos más relevantes. Puedes pasar el slide, por favor. Dentro de las brechas y desafíos que enfrentamos como gobierno y como país, son principalmente brechas geográficas. También persiste una alta proporción de bajos ingresos, en donde el 38.1% de la población en la República Dominicana gana menos de 13.700 pesos. Existe también una brecha de género importante, ahí pueden ver los datos, y muchas veces nos encontramos, pueden ver el dato de la Encuesta Nacional de Inclusión y Educación Financiera, que el 55.9% de la población aún prefiere manejar todas sus transacciones en efectivo. Algunas de las oportunidades que identificamos y que identifica la encuesta es que se requiere continuar incrementando la participación en charlas y materiales de educación financiera. Es un poco lo que van a ver. Y ahí tienen las estadísticas. Quisiera, por un tema de tiempo, aprovechar y seguir con el siguiente slide. ¿Cómo trabajamos? ¿Cómo lo hacemos? Bueno, nosotros tenemos una estrategia integral, como les dije ahorita, una estrategia integral que vincula a los beneficiarios en diversos programas. Aquí tienen los logos de nuestros programas íconos, Mujeres Superemprendedoras, que es un programa que motiva y lleva a la beneficiaria y al beneficiario a través de una ruta de formación y de capacitación en habilidades blandas, pero además con una clave y un fundamento en la educación financiera. ¿Cómo logramos esta educación financiera? Lo logramos a través de alianzas estratégicas con la banca privada, con la banca del gobierno, pero también con instituciones del Estado, como el Ministerio de Industria y Comercio, el Ministerio de Trabajo, el Infotep, para desarrollar esas capacidades alrededor del conocimiento en materia de inclusión económica, porque para garantizar la sostenibilidad de esos emprendimientos es necesaria la formación. Obviamente seguimos una ruta, como pueden ver, y vinculamos el acceso a productos financieros para lograr que luego de estar formadas estos y estas beneficiarias pues puedan de manera exitosa insertarse en el sector productivo. Por ejemplo, agricultura familiar, que es uno de nuestros programas estrella, vincula a esa población de los sectores más rurales con toda esta ruta formativa y Manos Dominicanas, que es uno de nuestros programas estrella también, que trabajamos con todo el tema de promoción de la artesanía dominicana, pero con un eje fundamental, un eje central en la formación. En el desarrollo de capacidades y en el acceso a herramientas financieras. Puedes pasar el slide. Para lograr todo esto, lo hacemos a través de alianzas estratégicas. Actualmente contamos con alrededor de 120 alianzas estratégicas. Puedes pasar el slide. Aquí voy a mencionar algunas de las alianzas fundamentales. Nosotros tenemos una colaboración, como pueden ver en la presentación, con una institución bancaria que trabaja con la banca dominicana, se llama Somos Mío. El año 2024 recibimos un galardón en los premios Latam Digital, precisamente por desarrollar una estrategia como mejor proyecto con impacto social utilizando tecnologías digitales. Somos Mío es una plataforma digital que nos ha permitido integrar y bancarizar a un mayor número de beneficiarios y continuamos la meta de seguir avanzando en esa inclusión. Parte de las barreras que se presentan en este proceso es precisamente como lo que comentaba ahorita, la falta de internet o la falta de acceso al Internet. Sin embargo, la herramienta ha permitido que podamos ampliar y escalar nuestro impacto. También vinculamos con instituciones como el Consejo Nacional de Promoción y Apoyo a la Mediana y Pequeña Empresa, PROMIPYME, para créditos, luego de que la persona tiene las capacidades generadas. Yo pienso que un elemento importante, dos cosas que quiero señalar, creo que son relevantes. Nosotros tenemos una estrategia de vivienda en el país para vincular a los beneficiarios con su primera vivienda. En el proceso de desarrollo de esa estrategia nos encontramos con una brecha importante de que los beneficiarios generalmente no tenían el perfil necesario para poder acceder a los créditos de la banca. Y en ese momento desarrollamos de la mano con la banca una ficha de levantamiento que permitiera homologar los requisitos a esas características de esa población beneficiaria, permitiendo abrir el paso. Muchas veces son personas que nunca en su vida han tomado un crédito y que no tienen un historial crediticio. Entonces, este tipo de estrategias estrategias que bajamos a otros proyectos, permitió esa vinculación de ese beneficiario con esa nueva vivienda. Puedes pasar el slide. ¿Cómo logramos esto? Bueno, claramente lo logramos
And
a
Naomi,
través. Sí, ya
with
termino.
apologies, I want to jump in and ask you a question. Okay, super.
Oh, you can ask me a question, yes. Bueno, terminamos. ¿Cómo lo hacemos? Lo hacemos fortaleciendo los mecanismos de interoperabilidad, escalando los modelos de proyectos que nos han sido exitosos y todo esto a través de mejores datos y mejores políticas. Muchas gracias. Puedes seguir el último slide. Muchas gracias. Por último, cerrar diciendo que en Supérate creemos que la inclusión financiera debe estar al servicio de la inclusión económica y que ambos deben responder a las aspiraciones de las personas. Muchas gracias. Espero compartir preguntas y respuestas. Bye.
Absolutely. And please, all of our participants, you are encouraged to ask questions in the chat. If you have a question for a specific panelist, please just mention that when you pose the question, and we'll start to collect the questions and then have an open round of Q&A. But Naomi, for now, I'd like to just ask you a question about the extent to which Superate has leveraged community systems to effectively deliver financial services. Realizing that it's a national program, can you talk about the community systems component of it?
Sí, claro. Nosotros tenemos un sistema, 42 regionales, nosotros tenemos presencia a nivel regional y cada oficina regional maneja un equipo en el territorio que se conoce como supervisor de enlace, que es quien vincula con las comunidades. A través de este personal, nosotros llevamos todo lo que son los tipos de formaciones con los que estamos trabajando, las estrategias que estamos desarrollando. Entonces, También se desarrollan lo que se conoce como comunidades de aprendizaje. Ahora mismo estamos integrando el componente de mentoría y de elevar las capacidades de ese trabajador, de esa persona que trabaja en el territorio como trabajador social para lograr un mayor impacto y una mayor vinculación en los territorios. Creo que con eso respondo tu pregunta.
Excellent. That is excellent. Thank you so much. And I see that there are a number of other questions for you, so we will come back to you later in the program. So I'd like to introduce our second panelist, Ms. Angie Manzara. Angie brings more than 20 years experience in livelihoods programming and economic empowerment. As the Thrive 2030 Operations Director at Vision Fund International, Angie oversees a $70 million initiative across 11 countries. Previously, she held leadership roles at World Vision, directing livelihoods and environmental sustainability programs in 67 countries. With expertise in financial inclusion, policy influence, and advocacy, Angie is also an author, coach, and a finalist in the Africa Most Influential Women in Business and Government Awards. Angie joins us from South Africa, and she'll talk to us about World Vision's Thrive Project, 360-degree approach to tailoring services to the poor and ultra-poor segments and connecting them to financial services with digital solutions like the Dream Save app. Welcome, Angie.
Thank you so much, Serena. It's such a great pleasure, for me to share about the work that we are doing under Thrive. Thrive is an acronym that stands for Transforming Household Resilience in the Most Vulnerable Environments. And Serena has rightly stated that this is like a 360-degree integrated and systemic approach to building resilience of the most vulnerable households to improve their income, to build their resilience to different stresses and shocks that they face in their lives. Next slide, please. So Thrive 2030, we are implementing it in 11 countries. If we can go to the next slide, please, so that others can see the slides. Thrive 2030 is implemented in across 11 countries, across the Africa region, West Africa region, Southern Africa region. The previous slide, I think we are moving, so yeah, thank you so much. So 11 countries in Africa, Asia, Latin America, and the Caribbean. The main objective of this program is to reach 10 million participants who are provided with tools and resources and services that they need to lift themselves out of extreme poverty. Can we go to the previous slide, please? To lift themselves out of extreme poverty. And then we have a systemic and layering and sequencing that we implement to ensure that we are building resilient livelihoods. This program is jointly implemented by World Vision and Vision Fund as a microfinance arm of World Vision to provide embedded financial education, women economic empowerment, savings training, savings group linkages, loans, and credit to the Thrive 2030 savings groups, producer groups, and even individual small and medium size enterprises. Next slide, please. So in terms of our target, as the name highlights, that we are targeting the most vulnerable. We are targeting the ultra poor and the extreme poor, those that are living at less than $2.15 a day. And then we have, two graduation pathways for financial inclusion. If you look at this business plan framework for Thrive 2030, when we are targeting the ultra poor here who are at the bottom of the economic ladder, we are implementing and introducing what we call biblical empowered worldview, which is looking at mindset change, collective action as well, for the most vulnerable people to understand that they have the power to transform their own lives, to live a life of dignity, utilizing the resources that surround them. And then we add financial inclusion through our savings groups methodology, which we call savings for transformation, in World Vision, so that when they have done biblical empowered worldview, they are supported to develop what we call household economic development plans, and then they go to the savings group as a first entry to financial inclusion to finance those dreams. But in the same household as well, we see that when we have registered at least 2 members of each household to participate in the program. For example, the wife or the woman can decide to follow the savings for transformation pathway, and the husband can decide to follow the producer groups and engaging in local value chain, inclusive market systems development, engaging with others on a common value chain. We also, provide opportunities as Vision Fund to meet those needs, and we are currently introducing what is called, the credit enterprise, product for those producer groups. But what we have actually seen is that insurance is very important. We are bringing innovations into this program, introducing micro insurance, life insurance, health insurance, climate insurance to the Thrive 2030, households. I call this beating the snakes and ladder game, because after we have gone through this economic ladder, there are stresses of life like climate change and other stresses that may come and pull back down these ultra poor and extreme poor back to the bottom of the economic ladder. So we are introducing as a microfinance insurance to to savings groups that are our clients, having received finance accelerating savings groups, life insurance, health insurance, so that they can have what we call hemora in Rwanda, which is they call peace of mind, in order for them to invest, knowing that any challenges that they face, any stresses, they can have a fallback plan. Let's go ahead. Next slide. Next slide, please. Okay, so what is so exciting about Thrive 2030 is that we have introduced in what is called digitization of savings groups across all the 11 countries implementing Thrive. And DreamSave is really a smart, fun, easy way to manage savings groups for ultra poor and poor population. We often hear people saying that digitization is very difficult when you go to the hard to reach populations, to the rural areas. There's challenges of internet connectivity. We have challenges with access to mobile phones. And these people are normally termed unbankable because they don't have collateral. They have challenges of accessing financial services from formal financial institutions, like banks. But what we are doing right now in Thrive, using what we call the DreamSave app, which is an application developed by DreamStart Labs, is to digitize our savings groups. And we are meeting these savings groups where they are. Where they are saving in that metal box, we are coming in step-by-step process to begin digitizing the paper ledger, the passbook that they are recording their shares, their savings, to ensure that we are taking account of high illiteracy levels that normally causes errors in the calculations when they meet, and they are saving money, they are buying shares, and the whole app itself works offline. I think that is really the beauty. So internet connectivity issues don't become a problem because it is structured in a way that it works offline. So there's no excuse that we cannot digitize groups that are in the hard to reach areas. But what is key in terms of integrating financial inclusion here is that when we digitize the paper ledger, it ensures that record keeping is easy, errors are reduced, and that financial institutions like Vision Fund will be able to see the information, the behaviors of these savings groups on what we call DreamSave Insight, because data is automatically collected. And when we do that, we are also saving time, for women to engage in other activities. We are saving time to introduce other income generating activities, trainings, empowered worldview, or IMCA. So this is how DreamSave works, and linkages with Vision Fund. You can see here, this is a population of savings groups that are using the DreamSave app, and the information is uploaded and saved on what we call DreamSave Insight. And Vision Fund is able to go into the system and see the behavior of the groups, which groups qualify in accordance with the eligibility criteria, to receive fast loans, to receive, other, loans, even individual loans to members of the savings group. So we have the Dream Vision portal. It is saving time to go to the field to do eligibility criteria assessment. So it is actually helping the financial institution to reach more clients, to reach greater scale and impact. So we have a huge target, 134,500 digitized groups across 11 countries by 2030. And our target for financial inclusion is about 800,000, of those participants. Next slide, please. Yeah, my time is ticking. Yeah, Nick, can I have a next slide, please? So I'm going to give you another cherry on top with regards to, digitization under Thrive. So we also are digitizing farmers to link the smallholder farmers. Remember, I said that there are others that are engaged in different value chains and engaged as producer groups. So we are linking them through a digital app that links them with the suppliers and the buyers, in order for them to do for themselves gross margin analysis, to be able to compare prices that are profitable for them. But it's also a platform that helps these suppliers and buyers to go to an application center in one place rather than moving from one household to another, which brings them a bargaining muscle for them to improve their income when they are engaging. So Vision Fund, this platform, we are hoping that it is going to give us an opportunity to leverage this platform and reach those producer groups with other microfinance products like climate financing, like insurance or credit enterprise for small, medium business entrepreneurs. What are the challenges and lessons for digitization? Access to to group funds is always a challenge, right? Backup data on DreamSave Insights is always a challenge, particularly because the groups need to go to an area where there's internet in order to back up that data. But the lessons that we found is that digitization is a gradual process, requires constant training and monitoring until all groups are comfortable. It is important to keep the social cohesion of the groups. So let's integrate digitization with savings groups, training modules, be it. It is also important, as we have learned, that engaging a youth digital champion goes a long way to adapt these technologies quicker, to use the DreamSave app. And digitization also allows Vision Fund to partner outside our Vision Fund network. For as long as there's a World Vision office having savings groups, we are therefore able to go and engage with the willing FSP to collaborate so that we can provide the fast linkages and also introduce this DreamSave. Like, for example, we've just launched in Eswatini, where we don't have Vision Fund presence in that country. Linking insurance to fast is also something that I mentioned will give savings group peace of mind to invest in income generation activities instead of hiding the money under the pillows, thinking that there will be an emergency that will come. They are now flexible to invest in these income generation activities because there is a safety net, there's insurance that when illness comes in the family, when there is death in the family, they are covered. Recommendation, the slide that is going to talk about the recommendation to ensure economic resilience, financial inclusion. If you can go to the last slide, please. Whoever is
I think
moving the slides.
Mm-hmm.
Is it stuck? Is the
it
slide
looks
stuck
like
somehow?
we can see it now moving forward.
So I can speak through the last slide. Okay, that's fine. If it's so what we have learned that the next steps for strengthening financial and economic inclusion for the ultra poor and the poor is that mindset and behavior change trainings is very important. We need to help them develop household economic development plans so that when they start saving and accessing financial services, we have already shifted their mindset from borrowing for consumption support towards income generation activities. The other point is that scale up digitization of savings groups is very important for easy, fast, and microfinance linkages. We need to digitize smallholder farmers so that we can increase the basket of our financial services to them. I spoke about beating the snakes and ladder game. Insurance coverage is very important. Let's link that to savings groups. Let's link that to producer groups. So all these recommendations really reinforces what the report is concluding, that there is a greater role of financial services in building anticipatory, absorptive, and adaptive resilience. So I think that was my last slide, and I end here, Serena.
Thank you so much. Just in the interest of time, I want to ask you to do a lightning round in response to this $1 million question, if you don't mind. And again, there are many other questions for you as we get to the next section. Can you talk about maybe one critical factor for making digital financial inclusion tools like DreamSave sustainable beyond the scope of donor funding in just 1 minute?
Thank you so much, Serena. Actually, there are, two ways that I see it contributing to this. So the first point that I would like to highlight is that when we do empowered worldview training or mindset change training to the saving group members, they will begin to understand that they are not digitizing for a project, they're not digitizing for world vision, but they are digitizing for their own benefit so that they can access these financial services, because digitization is going to create a credit history for them. Remember, they don't have a collateral. So that's number one. With the mindset change, they will be able to cover the cost of digitizing savings groups. It's not a lot of money. Number two, integrating, working with microfinance institutions like what a Vision Fund is very critical, because remember, we are actually reducing the travel time to the field to do eligibility criteria assessment, to go and monitor the health status of the groups. So it's more like they're buying that data in order to provide and expand financial services to these savings groups. So that cost can also be absorbed by microfinance institutions. So we need to start thinking about those ways now when we're implementing this grant project, to look at sustainability and engaging with those partners.
Thank you so much. Really good insights, Angie. Last but not least, I'd like to introduce Mr. Desmond
Serena, over to you.
Yes, thank you so much. I think everyone can hear me. We are ready for our final panelist, Mr. Desmond Duametu, who is a seasoned development practitioner with over 28 years of experience and currently serving as Ghana's productive inclusion specialist within the country's productive safety net program. Desmond has collaborated with many global institutions, including World Bank, African Development Bank, UNICEF, ILO, and others, contributing to the design, implementation, and evaluation of major social protection and economic inclusion programs in Ghana. Desmond's experience includes leveraging technology for transparency and efficiency, integrating psychosocial support and behavioral change interventions, and promoting social accountability. He's a dedicated contributor to World Bank's Global Partnership for Economic Inclusion and passionate about advancing knowledge and productive and economic inclusion programming. And now, Desmond will share some of the experiences from Ghana's Productive Safety Net program. Welcome, Desmond.
Thank you very much, and good morning from Ghana. Once again, we have the opportunity to be on this platform, which is furthering global learning in how to enhance productive inclusion. Well, I'd like, first of all, to provide context and then also speak a bit about our program, which literally provides livelihood opportunities for extreme poor households. I mean, it's been running for some time now. And as we have all gathered here today, we have tried to infuse financial inclusion into our economic inclusion programming, and also done a bit of digitization. I mean, it's just the beginning of a very long journey for us. So we're here to share our lessons and experiences with you. So please move to the next slide. Hello? Hello? Hello?
I think they're advancing the slide now. Thank you for your patience, Desmond.
Desmond, we are resharing the slides again. One moment.
So whilst at that, I like to also continue in saying that our economic inclusion program has tried to serve beneficiaries on the country's flagship cash transfer program and also the public works program. And to date, we have onboarded close to 63,000 beneficiaries who are doing their best in changing their circumstances and fortunes. This is an advanced slide. Can we go back to the beginning, please?
And while waiting for the slides, Desmond, if you want to keep pace with your talking points, feel free, and then we will catch up with the slides.
Yeah, so probably let me also tell you a bit about how we began. In Ghana, we began our economic inclusion programming with manual processes where we did everything literally using manual processes. Even cash payment was manual, but we knew that was fraught with a lot of challenges that had to do with transparency and value for money, and also ensuring that beneficiaries receive satisfaction for services. So learning that lesson very early in the day, we started in ensuring that beneficiaries receive financial services. So we have gone through the phases of, yes, introducing VSLAs into our programming. And then also we have done like digitization. Just to let you know why we decided to take this path, it is because, one, the beneficiaries that we serve, who are mostly in rural areas, did not have opportunities of saving. They didn't have financial inclusion opportunities, largely because the traditional banks did not exist in the rural areas. It's also because they were mostly illiterate, and that informed the kind of interventions that were introduced. Again, we also had issues with traditional banks in Ghana not providing quality service to beneficiaries, and the beneficiaries themselves did not find it attractive to go to these financial institutions because of the factor of intimidation. And most, like I said, of the communities we serve were hard to reach areas. So this informed our design of financial inclusion and what we have done to date. So some of the interventions we have brought on board has been to introduce a heavy dose of VSLA activity in the community that we work in. This we have done with partners. I mean, World Vision has been a key partner. We have also worked with Care International, and our approach has been that we leverage partnerships, which I'll be talking about in a subsequent slide. Please, next slide. Yeah, so we do a lot of VSLAs, and we also along the line, realizing that beneficiaries did not have this culture of savings. It did pilots in a behavioral science, which was intended to inculcate in beneficiaries the habit of saving. That has gone very successful, and we are currently scaling that up. We've also introduced beneficiaries to mobile money, which provides flexibility for beneficiaries. It also enables beneficiaries to have options on where to put their funds into. And this we have done with the necessary accompaniment of adequate financial literacy that enables beneficiaries to avoid risks normally associated with digital financial transactions and MOMO, especially in our part of the world. We have also along the line learned that, yes, it's not every prescription or intervention that works well in the rural area that would be a perfect fit for the urban space. Now that we have moved our programming into the urban space, we are learning those lessons, and it's informing the kind of financial inclusion interventions that we would want to prioritize for the urban beneficiaries. And in the urban areas, for instance, where opportunities exist, beneficiaries are being linked to existing financial institutions, and a lot of the mobile money, uptake is happening in the urban program. So that also is something that would want to put across. Unlike the rural areas where internet penetration or telecommunication penetration is not that good, you would not want to emphasize mobile money in those areas. But however, when you come to the urban space where there are opportunities and beneficiaries have a plethora of opportunities that they can take advantage of, we have tried to emphasize a bit of the digital financial interventions like MOMO, and then also we use an e-switch, which is literally giving beneficiaries a smart card and linking them to a payment platform that one has biometric capabilities and also have online capabilities that enable beneficiaries to be able to access services even where there are no internet or telecommunication penetration. Can I move on to the next slide, please? Okay, so some of the partnerships that we have harnessed in moving our financial inclusion to scale has been working with NGOs to, as it were, go into the field because they have presence in the field. They literally have resources that they can deploy. They have the knowledge. So we partner with them to open up a lot more opportunities for beneficiaries. We've also worked in partnership with fintech service providers and also mobile money for service providers, and that is enabling us to introduce digital financial services for beneficiaries. Of course, we've also relied on partnership with traditional rural banks who are close to beneficiaries and who provide withdrawal and disbursement services. And of course, some of these traditional banks also serve as opportunity for credit for persons on an economic inclusion program who are interested or who have grown their investments to the point where they will need additional capital to grow their investments. Of course, civil society and NGOs have also been very helpful in the area of research. As I mentioned, we work with S4E1 on our savings model, and also we rely on them to create awareness and the necessary advocacy for the increase in uptake on financial inclusion for beneficiaries and financial literacy for that matter. In terms of lessons which we have captured on the next slide, please move to the next slide. These are some of the lessons that the Ghanaian team have to share. We have grown to realize that because of the low literacy among the beneficiaries, and also the fact that they don't have a sophistication, we try to keep the financial inclusion interventions at very basic levels so that beneficiaries can't, as it were, relate to this. And also, every financial inclusion program that must be designed would have to take into account the social cultural circumstances and objectives of the initiative to ensure that it is able to address the needs of the program. And again, related to that is to achieve a fine balance between the objectives of a program, efficiency, and beneficiary satisfaction. I say that in a sense that unlike other cash transfer programs that are meant for consumption, economic inclusion interventions, as we've always said, is intended for investment and providing for the households beyond consumption. So you need to tailor your financial inclusion interventions such that it will respond to the needs of the program. Of course, we also have this to say that where financial inclusion or financial literacy programs rely on technology, there is always a need for a backup in the event that technology fails so that beneficiaries would not have to suffer in accessing service. So in our case, for instance, we always provide a fallback plan so that in an event where technology fails, we can rely on that fallback plan to ensure that services are rendered to beneficiaries. Then also the need to draw a distinction between financial inclusion tools that would feed the rural space, as I said, vis-a-vis what would feed the urban space. A lot of the programs are now going into the urban space. So we don't have to go in assuming that whatever works well in the rural space can be replicated, in the same manner in the urban space. In the urban space where opportunities exist, where there are sophistications and the dynamics are different, we need to come up with tailor-made solutions that would address the specific needs of the urban poor who are our clients in this regard. And then also the last one is given the vulnerability and low literacy levels of beneficiaries, any effort at financial inclusion, especially deploying technology, would require the needed investment in awareness creation and the possible minefields that would expose beneficiaries. In this regard, in our country, Ghana, there's a lot of talk around e-fraud and the fact that beneficiaries there will be manipulation. So we will need to back that up with enough education and awareness creation that would ensure that the interests of beneficiaries are protected and served. This is what we have to share from Ghana, and it's our little contribution to, broadening knowledge in financial inclusion vis-a-vis economic inclusion programming. Thank you.
Thank you so much, Desmond. Really, really insightful. I have one initial question for you, and then we'll have some others shortly. This is just about the design and relative effects of Ghana's financial inclusion interventions on female participants. Can you dive into that a bit? Any comparisons or contrast in terms of the larger population served? How have the financial inclusion services particularly affected female clients?
Come again. I didn't hear the question. Come again. Can you
Can you hear me now?
I can hear you very well now.
Okay.
Sure, go ahead.
Thinking about the overall productive safety net program and the financial inclusion interventions, how have those been designed to address the specific needs of female participants, and what have been the effects of those interventions on the female clients?
Okay, so I think that yes, that's an interesting one. In the field, we see a lot happening. I always would want to give this example of a particular community that we went to with a bank team where initially women did not own mobile phones, but once we introduced this whole idea of, oh, you can access your money on mobile phone, and we gave them all that they needed to know about the usefulness in using mobile phones as a means of transaction. We went back the next time, and over 70% of the women had acquired mobile phones, and some were even, sourcing markets using their mobile phones. So the effect has been tremendous in our part of the world. And what we encourage always is that we try to provide enough options, flexibilities for women. And this is it has gone a long way in empowering women and helping women, especially on the economic inclusion program, to one, access market information and also be able to carry out transactions. So that goes without measure, and you have no idea what the women in Ghana stand to benefit from it. We've also added that by doing some digital financial literacy, where we have recorded messages to, as it were, educate them on the possible dangers and the risks that come with the use of mobile phones. So I think that mobile technology and the uptake with more transactions or mobile money transactions, it's one area that we seem to be recording very high scores relating to how we address the needs of women. Thank you.
Thank you so much.
And if
and thank you.
In our programming, about 69% of the beneficiaries are women. And so whatever I'm saying now is in relation to those 69% who are beneficiaries on the program.
Well understood. Thank you again, Desmond. So you've heard from our panelists. Lots of discussion already in the chat, and we have taken note of the questions that have not already been answered. And so when we come to our sort of lightning round, we'll come back to a number of them. But before we get there, I'd like to welcome our discussant, Mrs. Aude de Montesquieu, who is the Fin Equity Community of Practice Facilitator at CGAP, and she has nearly 20 years of experience in financial inclusion, livelihoods, and social protection. Aude previously led CGAP's work on economic inclusion for the poorest, managing the CGAP Ford Foundation graduation program and co-founding the Graduation Community of Practice. She co-created the World Bank's Partnership for Economic Inclusion to help governments scale economic inclusion programs. Aude also co-edited the State of Economic Inclusion report in 2021. A former social protection specialist at the World Bank and senior advisor at Brack's Institute for Government Development, Aude has contributed extensively to research, policy, and global dialogue on extreme poverty reduction. She holds degrees from Sciences Po Paris and La Sorbonne and is fluent in multiple languages. We'd love to hear your synthesis and insights from what you've heard from today's panelists. Aude, over to you.
Thank you so much, Serena, for the opportunity, and it's really nice to be back here. I just want to acknowledge that we running a tiny bit late, so I'm going to keep my comments at a very high level and hoping that we can address and go more in detail during the Q&A. So the first thing that really, I think, came through when looking at the practice note and the presentation that Janet shared when we started is that even though financial inclusion is rarely the entry point for economic inclusion programs, I think you said only 27% of programs have that as an entry point, 73% of programs are offering some form of financial services, which is great. But that said, I think we need to acknowledge that apart from a few great examples, some of which were on the panel today, by and large, in a lot of places, what we're seeing is really basic, plain vanilla transfers of cash and maybe very basic savings account as the financial product that's being offered within economic inclusion programs. And so I think it's really inspiring to hear from panelists here, but just also acknowledging that The reality is that there is a huge space for innovation and new experiences. The second is, really reflected in the presentations here. There's a lot to be done to become truly financially inclusive beyond just savings services, but really thinking of the whole range of savings products, of the financial products that can be useful. We heard from Vision Fund about the role that insurance can play, in particular, to help economic inclusion programs participants protect themselves against major risks. We also heard just now from Desmond about the role that credit can play in helping people continue to grow their enterprises after an economic inclusion program is over. But I also want to emphasize something that Desmond said, is that credit, financial services and credit remains a risky adventure. There are a lot of risk associated with debt, and it's really important that the products that are offered are designed specifically for this group of very poor people. And that we need to think about what design and what delivery can work for this client group. The next thing I want to emphasize, and Desmond touched upon it also, is the need to design particularly for women. At CGAP and at Finequity, we've done a lot of work on the importance of not being gender blind when you design financial services. There are a lot of particular needs that women have. There are a lot of particular barriers that women face, including due to social norms, to regulations, etc. And we need to really deeply understand what are their preferences and give them choices as relate to financial services. The fourth point I want to raise is that a lot of CGAP research, and I invite you to look at the CGAP Impact Pathfinder that was recently launched, but a lot of CGAP research shows that financial services, in particular in the face of climate change, work well when they are bundled. And this is true, holds very true for women. Last year at Finequity, we did 3 case studies with Siwa, with MEDA, and with Village Enterprise, and what we were able to really see consistently is that financial services were often bundled with inputs or with training, with different sorts of activities that were mostly non-financial and that accompanied the financial service. The last point I want to make is that there might be a potential also with the link to financial services to leverage new sources of funding. And this is something that CGAP is also working on. But one of the things that the CGAP Funder Survey in 2022 showed is that private investors in financial inclusion were mostly looking to fund climate-related programs. And so I just want to put it out there that there is a great opportunity to innovate and to test new things, and there might also be some sources of funding that economic inclusion programs want to tap. So let me just stop here and Serena, turn it back over to you for questions. Thanks.
Excellent. Well done. Thank you so much, Aud. Okay, we are now ready for our lightning round, and lots of really, really good questions have come from the floor. So thank you again all for your tremendous engagement. Now, speakers, I need to ask you to really check your watches as we go through this round. I will ask each of you a question and ask that you respond in no more than 2 minutes. We're going to try to get through 2 rounds of questions, and then there's going to be a question for all of you to respond to, but at that point, I'll ask that you try to respond to that question in the chat so that we can get some additional feedback from the audience as we wrap up. Hope that sounds okay. And we're going to get started with you, Desmond. The first question from the floor is, how do you manage to both prioritize VSLA savings groups and credit options, as well as the mobile money and savings credit option for beneficiaries? So how do you balance the VSLA savings and credit versus the mobile money savings and credit within the national program?
So, okay, thank you very much. I think that's an interesting one. Yes, so like I alluded to in my presentation, you know, the VSLA for us has worked well within a rural setting where beneficiaries don't have opportunity, there's low telecommunication penetration. So we find it very useful in a rural setting. However, when you come to the urban area where there are opportunities, where the beneficiary characteristics is a bit, let me call it a bit literate, then you introduce a mobile money. So you find that in the urban area, there's a lot of gravitation towards mobile money, whereas in the rural area, we find the VSLA useful due to less reasons of lack of access to financial services, and also because of the communal nature of rural settings in Ghana. VSLAs are a good starting point. However, we try to link these VSLAs to traditional banks so that they can grow their capital base over time. So for us, VSLAs have been a good starting point. But what we have learned is that when you move into the urban space where the communalism is not that tight, then you can introduce to other elements, to beneficiaries to other elements like mobile money, which is catching on very fast in Ghana. That is not to say that mobile money is not in the rural communities, but it's not a very popular model in the rural communities. But of course, now that we as a program are trying to work beneficiaries into taking advantage of the mobile money revolution, then it makes sense that we introduce that to them as option. For instance, on our public works program, most beneficiaries would opt to take their earnings from mobile money, which we find is useful because at least they're able to retain some of the money on their, mobile money. And we also encourage them to use that as a means of saving, just same as the VSLA would provide. So the options are open. Depending on sophistication and what works for you, beneficiaries are open to accept any and, as it were, on board on any. But it is also good to encourage them to have both so that there is always a fallback. Thank you.
Wonderful. Thank you, Desmond. Naomi, over to you for this next question. One of the participants said, in your fourth slide, you mentioned how the support you provide facilitates formalization. Can you expand more on what you consider formalization?
Muchas gracias, Serena. Sí, claro, me escucho. La formalización es que los negocios, los emprendimientos, los desarrollos productivos de esos beneficiarios pues puedan entrar en el sistema financiero formal. Y para hacerlo deben estar registrados, deben tener un nombre, deben de acceder al sistema impositivo. Entonces hay toda una estrategia de acompañamiento a esas personas que han desarrollado las capacidades, pero que además cuentan con la capacidad económica o el desarrollo de sus emprendimientos de manera exitosa. Y entonces se le vincula, por ejemplo, con instituciones del Estado como el registro mercantil, para el registro del nombre, accediendo a esquemas de pago más fáciles para ellos, esquemas de pago no, esquemas de registro mucho más accesibles, y se les acompaña en esa ruta de formalización para poder entonces venderle al Estado. Quiero señalar que hay una estrategia importante. Nosotros tenemos el portal de compras y contrataciones en la República Dominicana, que es la institución del gobierno que maneja todo el proceso de compras públicas. Y una parte importante que hemos estado trabajando con nuestros beneficiarios, sobre todo con la parte agrícola, es lograr esa formalización para que puedan entonces poder ser proveedores del Estado y beneficiarse en ese sentido. No sé si respondí a la pregunta.
That's wonderful. Thank you so much. Our third question is for you, Angie. One participant says, I love the World Vision dual pathway to graduation via savings groups and producer groups. My question is, how do you get that ultra poor? How do you get to the ultra poor who are initially unable to save? And how do you get them to start saving? What options are available to them? Over to you.
Okay, thank you so much. If we go back to the Thrive 2030 business framework, there are two interventions that are at the bottom of the layering and the sequencing as they rise up the economic ladder. So for the ultra poor, the first entry point always is the biblical empowered worldview or empowered worldview mindset change training that will help them to understand that they can pool resources together with other members of the community to establish, savings groups. So savings groups is the first entry point towards financial inclusion. And we will train them savings group methodology for 2 years to understand the fidelity of implementation, to start developing the behaviors of saving and borrowing for income generation activities. So we are looking at the low-hanging fruits in terms of what are those value chains that they can engage, buying and selling tomatoes or buying and selling clothes, tailoring, those simple things that they can start bringing in income. So after 2 years, after they have gone through 2 successful share outs, we can then look at their portfolio of savings and decide then how much we can top up to their cash box through providing what we call finance accelerating savings groups, which is providing them 50% of their previous cycle share out. So if they have saved $500 for the whole year, we will come in and give them $250 on top. So you find that they're starting the next year with $750. They increase their income generation activities, and we continue step by step with them because we do not need to subject them under perpetual cycles of indebtedness. So we are really taking a careful criteria to ensure that they still benefit from the loans that they get at 50% of what they normally charge themselves. If they're charging 10% interest rates, we bring in first at 5% so that they get to keep the 5% and repay the 5%. So you can see that this is a development approach to offering microfinance. So we're not looking at numbers of people we are providing microfinance, but we are looking at the quality of the service that we are providing them in order for them to transform, to improve their income and to build resilience.
Wonderful. Thank you, Angie. I want to ask you a question myself, just based upon what you shared earlier. What are the blind spots that we continue to have as a community and how we design financial inclusion interventions? Think in terms of audience or delivery or otherwise. So what are our blind spots that we really need to be aware of and try to overcome?
Thanks, Serena. I think a first blind spot that really, I feel when I read the State of Economic 2024 report and looking at the practice note is just that we're being very generic about access to financial services, and we don't detail enough who has access to what type of services. And I just think for the next edition, it would be really interesting to know, to unpack that notion of access to financial services a bit more, knowing who has access to basic savings account, but who might have access to other forms of financial services and with what type of providers. So that's kind of at the very high level. I think it's a blind spot that we should try to improve on. I think a second blind spot, and I think it won't surprise you having spent the past 3 years with Finequity, is really we need to really hone in on the specific needs of women. A lot of the economic inclusion programs are trying to serve women. Some really want to be gender transformative, and we know in the financial service industry that not taking account of the specific needs of women is an error, that you cannot be gender blind. And I think when I think about like what are the blind spots, I'm thinking really we need to understand what means that a woman is more vulnerable to heat waves than men, for example. You hear that with Siwa in India, so they've done an insurance product for women in the market. Why would women be more vulnerable than men? Like everyone suffers heat more or less in the same way. But it's really about the fact that, well, men can always, be out of the market at times when the heat is stronger, and then work again at night when there might be when the temperature might be cooler, which is not something that women can do. So it's really about understanding this, and I took this example of SIWA, but I think it's a really important example of an organization that's been really iterative about how they design their financial and non-financial products so that they truly work for women, and also admirable organization for documenting and being open about some of the things that did not work and correcting those things. The last thing I think that we need that is a blind spot and we need to kind of consider globally is the role of subsidy. Financial services typically are offered they need sustainability, financial sustainability, but some of these products, in particular the insurance products that Vision Fund was talking about, some of these products are just really difficult to do in a way that is financially sustainable. And so I think we need to also unpack that black box of what is the role of subsidy for some of these financial products. Thanks a lot, Serena.
Thank you. Before we go to our second part of the lightning round, you may have seen that Janet posted 2 resources in the chat. One is the In Practice series paper that we're here really to talk around, if you will. You will have about 20 minutes to click on that link and download the report if you'd like to do it during the course of today's session. Of course, that report, as well as the blog that Janet posted, will be available after today on the World Bank PEI website, but we encourage you to download while you're here. And with that, I'd like to move on to our second round of questions. Desmond, this again will go back to you. So our audience member says, in Ghana, have you found opportunities to collaborate with the Health Promotion Division that supports social and behavior change in health, but also in general to promote improvements in Ghanaians' lives? Do you mind? Okay, go ahead.
That's fine. So yes, it's true. In Ghana, we kind of prioritize complementary services for our beneficiaries. And in one area that we do this is with the health sector. We currently are having some discussions with the health workers to see how we can infuse support in the area of reproductive health and nutrition for beneficiaries. I think that would be tested on the beneficiaries on the cash transfer program, and it will be scaled up to cover both public works and the beneficiaries on the economic inclusion program. So yes, health is one area. We also look at non-formal education, and we also do a bit of it with the fintechs in promoting financial literacy for beneficiaries. So in our programming, integral to our programming is expanding opportunity for linkage to complementary services for beneficiaries, and health happens to be one of the key ones. One of the things we even want to do, in this year, would be providing some support to beneficiaries. Basic ones like health checks, check their BP, check their sugar level. They're just very, very basic ones, so that it can contribute to the whole question of human development for beneficiaries. Anything that we can do to improve upon their lives and their well-being, yes, we invest in. So health happens to be one of them.
Thank you. Okay, I'd like to pass on to Naomi. This is a question about the financing for the Superate program. Can you talk about the way that the government is financing this really significant program?
Sí, claro que sí. Muchas gracias, Serena. Antes de responder esa pregunta, yo quisiera traer a colación. Tú comentabas sobre los blind spots, los puntos ciegos del proceso. Y me gustaría referir una frase que escuché en el día de ayer que me marcó bastante en materia de inclusión laboral, pero se asemeja, y es la historia de conexiones perdidas. Yo pienso que hay un importante elemento de focalización y de conexión entre los datos que tenemos sobre nuestras poblaciones beneficiarias y los datos de los territorios a los que impactamos, los datos económicos, sociales y la conexión de estos datos para poder entonces visibilizar en qué nivel, en qué grado está la población en relación a estos productos de inclusión económica y financiera y en relación a las acciones formativas que se requieren. Y con relación a la pregunta que me haces, el gobierno dominicano ha hecho, después de la pandemia, entendió que tenía que hacer un replanteamiento del uso del gasto, una eficiencia en el uso del gasto. Y precisamente hemos hemos transitado una ruta de transparencia y eficiencia del gasto que ha permitido, primero, entender y priorizar la protección social como un eslabón clave para la superación de la pobreza. Y muestra de eso es los indicadores económicos que resaltan sobre la economía de la República Dominicana y en el momento en el que estamos. Después, más a fondo, podría compartir con las personas que tienen interés en compartir sobre la experiencia de la República Dominicana. Muchas gracias.
Outstanding. Thank you, Naomi. Angie, you are going to get the last question in this round 2. And then everyone, I am going to ask you to give your parting words in about 30 seconds per person. So Angie, one of the participants has asked, how do you get smartphones into the hands of the ultra poor? Over to you.
Thank you. This might seem challenging, right, to a lot of people, that it's very difficult to get phones to the ultra poor. Let me just say that we have devised like 3 ways of how we can get these gadgets in the hands of the most vulnerable. So the first and foremost strategy is that we hope that after the Empowered Worldview training, and we have organized these populations into savings groups, they will be able to use the social fund to buy a group phone, which costs about $100. They only need one phone to digitize. So that is the first step. The second step is that if the group is not able to raise the $100, for example, World Vision can come in at a cost sharing, whereby the group can pay 50% and World Vision provides the 50%, because this will allow us to reach more poor people with these funds. The third one is when Vision Fund has developed what we call a mobile phone loan, which applies in 2 scenarios. The first scenario is that we can already provide a top-up loan to the first client of $100 so that it is integrated into their loan and they can buy a group phone. The other scenario is when we are providing a loan to born digital groups. These ones, they don't have a credit history yet, so the risk is even high. So what we do is to create a guarantee fund, whereby we provide that loan to the group, hoping that they will, pay something. Others will pay 100%, others might pay 70%, others might pay 20%. So we will be able to recuperate, that money back to cover the cost of the fund. And when the West come to the West, if they don't want to, to get a loan, we can actually start by using a member phone. A member who is willing to borrow their phone to start the digitization process as they are saving money to buy a phone. It is one of the entry points that we have devised to ensure that we are reaching the ultra poor with the mobile phones that they need to undertake digitization.
Excellent, excellent. Thank you again. Thanks to all the panelists. Okay, pull out your stopwatches. Here's the final question. We have such a variety of people. If you check the chat, you see people are calling from all over the world, all sorts of backgrounds, but everyone's engaged in financial inclusion or economic inclusion programs. As everyone leaves today's webinar, what's the one big idea you want them to be thinking about? 30 seconds. Any first takers?
I'm happy to start if
Go for it.
If helpful, yeah, I just want to say, I think this panel has reflected that there's an appetite and interest to do more, to test more, to experiment. Really, I think that there needs to be more innovation to think about new products, new design and delivery options to reach economic inclusion participants with financial services. We need to think more carefully about how financial services can become really an integral part of the post-graduation, post-economic inclusion sustainability strategies. And then the third is we should explore collectively the opportunity to leverage new funding sources, new climate funding sources, which could be a great opportunity.
And which is a very large topic. Thank you for planting that seed. Naomi, and then Angie, and then Desmond, 30 seconds, just one big idea.
Sí.
Okay, so let me take the next opportunity.
Okay.
Yes, I think from our side, we would want to say that yes, financial inclusion, it's always very good, especially when you go digital. But designs should always take into account the country context and circumstances of beneficiaries and must relate to their circumstances. And it also must be such that it is good to provide various multiple options for beneficiaries. And again, programs must find a way of investing in the necessary awareness that would enable beneficiaries optimize the use of these opportunities. One that readily comes to mind is the fact that if you are going to do digital financial literacy and we have a very vulnerable group, mostly who are illiterate, you must invest in getting them to be able to make the full use of the opportunity provided. So in effect, we are saying that yes, digital financial inclusion is always good and it's something that is desired by all, but you must take into account the circumstances of the beneficiary groups you are working with and make it one that would address their needs. Thank you.
Really appreciate it. Now, Naomi and Angie, with apologies, because we need to do one thing before everyone leaves, I want to invite you to respond to that last question in the chat. Now, for all of our participants, we love your feedback on today's session. And so my colleague will share a poll in the chat and just ask that you provide your feedback. So I will read through the questions for everyone's just clarity. And then please provide your feedback and feel free to keep this engagement and hope you've made some new connections during today's chat. So the first question is, would you use ideas and materials from today's session for your future work in this area? Do you strongly agree, feel unsure, disagree, or strongly disagree? The second question is, would you recommend this series of webinars to your colleagues? And feel free to answer in the poll. I see there are some comments coming in the chat. As you respond to this, I do want to take a moment to thank our organizers at World Bank Partnership for Economic Inclusion. I'd like to thank our panelists, our discussant, my co-authors on this paper, Inez and Vidya and Dan, and especially all of you for taking the time either at the beginning of your day or the end of your day or even late in the evening to be part of today's discussion. So I think we may be sharing the results of this poll post-event, but for now, I think we have wrapped up and just really want to thank you for being with us. Wishing you all a great rest of the day.